Hello, this is Brian Rezny, President of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. We're firmly into the second quarter. Of course, the first quarter we had volatility as normal, and I've talked about this repeatedly on my update videos. You know, generally speaking, most markets were down around the world, quite a bit actually in the first quarter. The bond market was actually down quite a bit more. What's interesting is, let's say the stock market, the big large cap S&P index was down around, let's say 6%, 6.5% year to date going into the end of the first quarter. If you look at government treasuries, supposedly the safest investment asset class in the world, if you look at the 20-year treasury, it was down over 10%. So wait, bonds are down 10% or more, but equity stocks, which are supposed to be risky, were down a lot less. That's how things happen when rates start moving up. So one of the things I try to stress to every investor, especially our clients, every quarter is not going to be up. In fact, I'm going to be totally realistic and honest with every one of our clients, as I always am. This quarter could be down 1 or 2%. Next quarter could be down 1 or 2%. And then we might get a real good pop in the fourth quarter. Or this quarter might be up 5 or 6%. So again, things don't always go up every quarter. Sometimes you'll have 6 months, 12 months where things kind of just do nothing, bounce around a lot, and just hang there. Remember, investing is a process. Last year was an incredible year for our clients. The year before that, the year before that. So at the end of the day, what I try to explain to every client is every year is not going to be up 15 or 20%. You're going to have a year like this year where maybe we end the year down 5% negative. Or maybe we end up 6% positive by the year end. But in the next 3 years, I think things are going to be pretty darn good. Let's talk a little bit about inflation. As I made a comment, it's going to be a little more sticky through the rest of this year. A lot of that attributed to not Vladimir Putin, by the way, not at all. It's the Biden administration. And again, whether you're a Democrat or Republican, I'm not picking on Biden as a Democrat. His policies are failed policies. We're going to have some major issues. It's not going to affect our clients, but it is going to affect the poor and the middle class. And that's sad, because I want everybody to do well. But oil, not only for financial security or energy in general, but also for security, global security, is very important to be energy independent as we go on this rampage for cleaner energy, which I'm all for. So what's happened is this, and I've talked about this over the last couple updates. The Biden administration's policies have put a war on the oil industry in general. They talk about they have all these oil leases available. But what they do is, what they don't tell you factually, folks, is, and the oil companies already know this, it's almost impossible to get an oil lease approved. And if you do get it approved, it's going to take 2 or 3 years. And when it does get approved, your royalties went up 50% than what they used to be paid by the government, which now means these integrated companies or producers can't make the profits they need to make in order to actually go ahead and invest money. So that's one thing. They're making it almost impossible legally to produce oil in the United States, and totally financially impossible to make any money. So while they say that this stuff's available, it really is not. And who does that affect most? The poor and the middle class, not only here, but around the world. And it also affects our global security by not being energy independent, and also helping other countries who don't want to be tied to, let's say, Russian oil, be able to buy oil and gas from the United States. So good energy policy, well-rounded in all aspects, is vitally important. And by the way, just so you guys understand, clean energy costs 2 to 4 times minimum. 2 to 4 times minimum, double that kind of cost, more than clean natural gas or clean oil or coal, just to give you an idea. So if it takes 2 to 4 times more cost structure for you to buy that type of energy, how is that really feasible for, again, the poor and the middle class? Now, 20 years down the road, 30 years down the road, as technology comes around, clean energy will become more affordable. But don't push it down the throat of all Americans in the country now, or the world, because you're only going to hurt the economies and you're going to hurt the poor and the middle class again. So what do I see for the rest of this year? I see continued volatility. We're going through this time of easy accommodation by the Fed. They're raising rates somewhat. I do not think rates are going to go up a lot. I think they might raise 50 basis points at the next meeting, maybe one more, but that's already baked into the current prices, by the way, of treasuries, whether it's 2-year, 5-year, 10 years, or 30-year treasuries. It's already kind of baked into the cake that they're already going to do this. And ultimately, we were starting to see supply chains easing quite a bit. Inflation will start to come down, but in general, I think inflation is still going to be in that maybe 3 to 4% range for a number of years. And the reason I say that is because oil and gas, the main energy that drives the world, if we don't start producing more and we don't realize that that is really the safety net for the economy and global security, inflation is going to stay stickier in that 3 to 4% for years to come. And remember, you can't just turn on the spigot. You have to have good policies so the oil companies know that if they invest money, billions of dollars today, that they will not get paid back for 7 to 8 years on these big projects, that you're going to be easy on them so they can actually invest in these infrastructure and oil exploration in order to make money so they can pump more oil and gas at very cheap rates to you, me, and the rest of the world. But again, expect normal volatility. Hopefully we will have a decent year by the end of the year. But again, there's some years where things are kind of flat to negative. Just expect it. The last 3 years have been fabulous for our clients. We could have an off year this year just because of the transition, as we're seeing from really the accommodative Fed and rates going up, and the higher inflation impact, which we need to curb, which again hurts poor and the middle class the most. If you have questions about your portfolio or you need a review, call the office. We always encourage you to make sure you do your normal reviews, whether phone or office. And again, if you have any friends, family members, or business acquaintances that need a real money management firm, our business grows from your business and referrals. We greatly appreciate it. Have a safe and profitable day.